let's start with Amazon, shall we? When you're looking at how much investment is being made from some of its competitors in the AI space, and you're looking at cloud, you're looking at tariffs and its business in shipping, what concerns you about the way Amazon moves forward?
I think that they have a tough road ahead of them. I'm less concerned about the cloud piece. The reality is that as their legacy customers catch up on cloud, their cloud piece of their piece of that AI cloud business will grow. I don't think it's necessarily bad that they're a little bit behind because their customer base historically hasn't used as much AI. I think that when you do see revenue from them, it's a little bit stickier because it means that their actual customers are actually using it, whereas some of these other platforms, you see a lot of sort of startups that have raised billions in venture capital that are using that money to try to kind of build a real business of their own by giving it to Google, giving it to Microsoft for their cloud compute, like OpenAI and the Microsoft deal. So I don't worry as much about AWS. I do worry a lot about shipping because those tariffs are not going to be good. That being said, the removal of the de minimis exception, I think, actually could be good for Amazon because all of a sudden Shein and Temu have a much harder road to hoe. And so I do think that there could be some upside for Amazon in that.
When you look at the fact that, for instance, Apple reporting iPhone sales went up, they said it was responsible for about 1% of its revenues. When you look at the rush to get in and purchase those iPhones before tariffs go into effect, is it possible that Amazon also benefited from some of that as well? I mean, the health of the consumer, it beat estimates here. North American revenue, $100.1 billion versus the $97.7 billion the street was expecting.
Yeah, absolutely. I think that people have a lot of uncertainty. We saw even from last night to this morning about where the tariffs are going to land, what they're going to land on. We've all seen the videos circulating the internet about people getting crazy high tariff bills over the last few months on small products. And so I think that there is a rush to sort of get while the getting's good. And I think that that's going to peter off in this next quarter. And the consumer confidence isn't at an all-time high, and so people might start watching their wallets a little bit more.
When you look at Apple, and yes, it benefited from that rush to buy, and as I mentioned, an increase in sales in China, is that a trend that you predict will be sustainable?
Yeah, I mean, the China sales are interesting. They cut prices, right? So does Apple have enough cash to be a little bit more competitively priced in China for a very long time? Yes, they have massive, massive cash stockpiles. Will the street love that they are using discounting as a strategy? I mean, we've seen this with Tesla in China as well, where when you start to have to compete on price in China, that is a very dangerous race to the bottom because the CPP is much more committed to winning that race than you are and your shareholders are. And so I do think that it's going to be tough for them to maintain that long term. But I think in the shorter term, look, when your Apple device breaks, you tend to go buy another Apple device. I don't think that's going to change, but I do think that unless they have some exciting newness in the product line, which they haven't over the last few years, it's going to feel like a really easy save to just wait another quarter or wait another year to replenish. So I don't see loads of growth in the rest of this year for them.
The other thing that's remarkable is you're seeing the suppliers to Apple really benefiting. AMD, the top Apple supplier, up 81% over the last 3 months. Broadcom up 52%, Jabil up 58%, Flex up 45%, and the like. I mean, the tariffs and the weakening dollar don't really seem to matter to big tech at all. Look at the IPOs. I mean, Figma yesterday was just remarkable. I think when you look at that, it ended the day with a market cap of $68 billion almost. Started priced at 33 and then closed at 115 and then rose to 126 in the aftermarket trading.
Yeah, there is a lot of demand right now for tech IPOs, which is a long time coming, and I think we'll see a lot more. But yeah, I mean, big tech seems pretty immune to all of this, and we also have to remember that there is some meme stock activity, not necessarily in all of these names, but we know that the retail guys are definitely out and about right now, and so I think that it's obvious that there's just a lot of energy going into very, very, very few names. But you have to remember remember, it's not the best time to keep cash on the sidelines either, because the dollar is way down so far this year. And so if we're sitting on cash, even in a high yield savings account or bonds, it's just not returning like it used to. So why not put it into some of these high growth ones and make up your difference in a day or two?